And I remember thinking there, as I'm looking at a pile of loan docs that are about to encumber me to, let's just say, several $100,000 in debt, and going, do I still want this thing?
Welcome to the Old Fashioned Real Estate Show, where hosts Brian Leverage and Jeffrey Holst pour out old-fashioned real estate advice.
Welcome back to another episode of the Old Fashioned Real Estate Show. I'm Brian Leverage. He's Jeff Holst.
That's correct. I was testing you to see if you knew who I was.
I haven't forgotten yet. If we film one more of these today, I very well could, though.
Depends on how strong you poured this drink. Let's check it out.
Well, it's not apple juice.
The best iced tea I've ever had. So, Brian, we have a really interesting topic to talk about today. Are you excited for it?
Super jazzed.
So, what we're going to talk about today is what we've been up to this year, the year of 2020, the coronavirus year.
If you remember, we did a Zoom sort of special edition episode back in early spring, I think it was.
Yeah, it was like the first or second week. Well, this is probably the third week of March, something like that.
Right, where we sort of did a little panel discussion of sorts on what we felt potential impacts on the market may be.
Right. Do you want to let's start with updating that. So at that time, people were pessimistic, to say the least. Do you feel like that's come true?
I know that it did not actually bear itself out in that way. We, as a management company, were sort of predicting maybe a 10% decline in revenue collections. That did not even come close to materializing.
In fact, for me, personally, our collections were actually better than we expected.
Right.
But not better than we expected, better than they were before the coronavirus happened.
Right. We did suffer a bit of a hit in overall collections. It was between 1% and 2%. And actually that came from commercial tenants who it turns out were much more heavily impacted by this than residential than your residential tenants. So it turns out when everything else is shut down and people don't have an outlet for their money, they generally pay rent.
Right. Well, so everything was shut down. They didn't have an outlet for their money. And realistically, most people were either still collecting salary or got stimulus money and or got unemployment money. And so for the critical point, whether we agree with everything Congress does or not, they came through with a really generous stimulus package that softened the blow much more than I expected.
Yeah, I would agree with that.
Right. So, but we didn't come here to talk about the effects of the coronavirus on the real estate market.
No.
We actually came here to talk about how, in spite of the coronavirus, we've continued to move forward in our real estate investing this year.
Right.
So, Brian, have you bought any real estate this year?
Just a couple.
I mean, I actually knew the answer since we bought some of them together, in fairness.
Right.
But, so what have you been up to real estate-wise? Let's start at the beginning of the year. How did January go for you, pre-coronavirus? Did you buy anything in January?
We did. We bought a 22-unit. I know because you were also there, as was I.
Yes. So you don't know it because I was there. You were there, and I know it because I was there.
So we bought a 22-unit basically townhome construction style project in the East Brainerd area of Chattanooga, Tennessee.
That's right.
And we are converting those into condos and about to start selling them off later this winter and into next year. Yeah. We're really excited about that.
No, I am excited about that because we bought it as an apartment complex, and by going through a process, it's not like you can just instantly sell them separately, but going through the process with our lawyers and getting everything done the way it needs to be done, we're able to convert it to condos, and we can sell them at a much higher price per unit as a result.
Right. And in full disclosure, we were under contract on that property in the previous basically summer.
Well, I mean, in January we didn't understand how significant coronavirus was, or we might have looked at it differently. But it turns out that it's going to be fine because inventory in Chattanooga is very low and things are selling very quickly.
Not only that, but when we were evaluating that, we suspected that the rents on the property at the time, they're all 2-bedroom units, but pretty good size. And as we mentioned, a really good area, high demand, good schools, etc. We've taken the rents up on a few of the units by 30 to 35%.
Right, and we suspected they were 25% below market.
Yeah.
And it turns out they were more like 30 to 35% below. So that deal's worked out very well for us. February, did you buy anything in February that you recall? I'm just taking this month by month.
We sold a duplex in February.
We did sell a duplex in February. I wasn't here for that.
You're right. I signed for you.
That's correct.
Yeah.
I was in Africa at the time.
Yes, it was. Jeff was climbing Mount Kilimanjaro.
I wasn't going to mention that. I was just saying I was in Africa.
Well, let's just save the audience the time.
And if you want to learn more about that, you can Google Kilimanjaro.
Sure. But we had bought a duplex last fall, and we fixed it up. We leased out one side at a real strong rent above market in that particular neighborhood.
Maybe not anymore, because market rents have continued to climb.
True, at the time.
Yes,
and then,
but the point is we bought it cheap, we sold it high, so it worked out well for us. That was February. And then March,
we bought another apartment.
We did a 16-unit in North Georgia.
Yes, we did.
And this is really interesting because the 16-unit we closed on
March 15th, give or
16, I think. Yeah. Whatever the Monday was that the president announced 15 days to slow the spread, that's the day we closed on that deal.
So normally buying any type of property, house, apartment building, etc., I get really excited. I love going to the closing table at those times.
Oh yeah.
And I remember thinking there, as I'm looking at a pile of loan docs that are about to encumber me to, let's just say, several $100,000 in debt, and going, do I still want this thing?
Yeah, and honestly, that's been a really good deal. We think it's going to be fine, but the coronavirus has slowed the turn times on that. But we had been working on that deal for almost a year at that point. Right. It was from
July.
Yeah, it's from the summer, so it was like 10 months, at least nine or 10 months.
We were supposed to close it in 2019. To be fair, there were some title issues, etc., things beyond our control that had to get cured first in order for us to close the sale.
But we did eventually close it, and we sat there at the closing table and we literally looked at each other and we went, are we sure we want to do this? Because there was so much uncertainty. But I think in retrospect, I'm glad we closed it.
Yeah.
In fact, I just heard we rented one of the units today.
Yes. Well, we have an application.
Well, that's not the same as renting it. But we have but the thing that's happened is we've gone in, we've had some turnover, which we expected. The first several months, we really didn't have much because you couldn't do evictions or anything like that because of the shutdown and all that. But the last few months, the last month or so, we've turned some units, we've renovated them, and we're raising the rents.
We had a couple units turn over in the spring, not long after we bought it. We renovated those. We took the rents up about 30% as well.
A couple $100 a door on both of those.
Yeah, and now we're renovating some more right now, taking applications. I think,
and shortly we'll be done with about half of the units in the building.
Exactly, which is great considering that we still got about 5 months, till we've owned it for a year, and I think we're on pace to basically have it fully stabilized.
Yeah, and what's great about that is too, the way that apartment complexes are valued. It's valued on the income approach, and we talked about this in our cap rate episode, which you can check out right there. Go ahead, point up. It's your turn. Go ahead, point up. It's over there. I have no idea which side it'll be on, but it'll be one of the two sides.
Stretch it out.
In the cap rate episode, we talked about that, and because we've increased the income, we've increased the value, which means we'll be able to refinance.
We've also decreased expenses.
Yeah, of course.
In concert with that,
so the net operating income has gone up dramatically, which increases the value, which increases the amount that we can get on a cash out refi.
That's right.
And our goal, as almost always, is to get all of our money back as soon as we possibly can.
Correct.
So that was March. Did you buy anything in April? That was a weird month, wasn't it?
Maybe.
Yeah,
I don't
I don't
remember.
know. It doesn't really matter. I think this like month by month thing is getting old. The next thing that we bought together was a duplex, and we just bought that a few weeks ago.
We did
In September.
Yeah. Well, actually, that's not the only thing you bought in September, is it?
Did I buy something else in September?
You bought a 12
I
unit.
did. I bought a 12 unit from this guy.
Yeah.
Yeah, I forgot about that. Is that weird that I'm in a point in my life where I've forgotten that I bought a 12 unit? I guess it kind of is.
Yeah.
But yeah, so I bought a 12 unit from him, and you still manage it. So we'll see how that works out. Hopefully you do a good job with it.
There we go. Well, so
But collections have been good, and that's a fully stabilized
it was a stabilized asset.
And I feel
some upside still probably.
Yeah, and I like the market long term. Mm-hmm. That's the thing with that particular deal is it's in an area where I believe that rents will continue to increase, and you don't have to have a home run on every single deal.
No, that's true, and we just closed on another duplex.
Yes, we did. So
it's a bit of a trend here. Apartment, duplex, apartment.
Yeah, so this duplex is interesting because it's on a street, and we had talked about the deal that you sold on that street before. It's on a street that Brian and I have both sold duplexes on, and that I currently own another duplex on. So we're very familiar with the market.
Yes.
And we bought this one from a wholesaler, and it's been vacant for a while. And I believe it will increase the value of all of the duplexes on the street by increasing this one to
just putting one person in it.
Just fixing it will increase the whole street, and that's good for me because I still have property on the street.
Yeah. So, and I think really maybe one of the takeaways from all of this too is that there's still opportunities out there.
That's right.
I don't think you should let fear be paralyze you to not take action, because we are in an upcycle. Yes,
there's actually a lot of opportunity.
Right, but there's still deals out.
Yeah, so the pricing on some of the stuff is I think kind of crazy, but there are opportunities. Money is super cheap right now. So if you have real estate, you should refinance. That's another thing I've done this year. I don't know. We refinanced our office building, the first deal we ever did together, and got a much lower rate earlier this year.
We did. We saved
$900 a month in payments. That's significant.
That is true. We lowered the interest rate by a full point. Yeah,
and we did a similar kind of refinance on our commercial strip mall that we own.
Yep.
And so those are huge savings.
I refinanced an industrial property that saved me about $1,300 a month alone.
Yeah. And I recently refinanced my 12 unit. I did that in February. My first apartment I ever bought. We were able to actually pull out all of the money that we put in and still have a payment that was less than the payment we had before, because we re-amortized again over the full period and were able to get a much lower interest rate. And that was, by the way, we went from 5.15% all the way down to 3.99%.
That's great.
I mean, 3 to 5, that sounds great. It's really still only just a point, but it feels a lot better, right?
Yeah.
And then I recently, with my partners in Michigan, refinanced a 41-unit apartment complex. We were able to pay everyone their money back on that as well and get cash out. And then we're about to close on our 19 unit, so we'll get some more cash out on that deal. So and the 19 unit is another one where we're getting several $100,000 out, re-amortizing it, and the payment's actually going down $43 a month.
Right.
I mean, it's unbelievable.
What a great world.
Yeah. So right now, if you have property and you haven't refinanced in a couple of years, you really should be considering that as well. So, Brian, is there anything else that you want to share about what you've been up to this year?
No, not really. I mean, I think the main takeaway here is that regardless of what's happening in the world around us, I think we all agree it's beyond our control, certainly. And that given that fact, you still need to go out and live your life. And not only live your life, but as an investor, there's opportunity that can still be found, and there's money to be made. So don't not do something because of a pandemic. Don't not do something because of who you might think is going to be sitting in the White House next year, etc.
Right. And we don't know. I mean, this episode may come out before or after the election. But as we sit here in October, we don't know what's going to happen. But we do know there's still going to be real estate in 2021.
Yeah. I mean, if there's not, we've been
Well, yeah. If there's not, then it doesn't really matter.
This will probably be about the last episode.
No, we're going to film one after the apocalypse. And with that, Brian, I hope you have an amazing COVID-free life.
Thank you.